Today, we want to focus on what does it look like when you're buying in a rising rate environment? What does that mean? What to look out for? And most importantly, what are the steps necessary to prepare yourself to ensure that it's a smooth process for you when you're buying a home? So, a couple quick things. What does a rising rate environment look like? It's simply where, if you're looking to purchase a few months out to a year out, you see rates are continuously going up. So, a couple quick things that you can do to just kind of notify that or notify your lender to make sure that you're adequately prepared is really just having a good understanding of what does your pre-approval or pre-qualification look like where things are at right now. If you're looking at, let's say right now your interest rate's at a 5%, what does it mean for your monthly payment if it goes to 5.5%, 6%, 7%? And what are those implications when it comes to your debt to income? Now, what do I mean by debt to income? We're really looking at this more from a qualification standpoint. Are you set up to where you can qualify at a 5.5, 6, 7% interest rate? Because that impact can be several $100s when it comes to purchasing. And, second, and maybe even more importantly, is this something you feel comfortable with? Is this monthly payment something where you're able to make on a consistent basis? A good thing to also keep in mind is, are there other expenses that you necessarily don't account for today? Are costs rising? Are houses going up in value as well? So those are some other things to kind of consider when it comes to that. Now, things that you can do to kind of prepare yourself is really just get a good understanding of your neighborhood. Real estate is extremely local. Having a good idea on what those costs look like in terms of what it's going to be to get into the home. Maybe you can do some different things in terms of paying a larger down payment to kind of offset some of those rising costs when it comes to interest rates. The other thing you can do is look at an adjustable rate mortgage versus a fixed. Maybe you only see yourself in the home for a shorter period of time. So those types of things or other investment vehicles in terms of looking at shorter term interest rates versus longer term interest rates can help you with your monthly payment. Now, they're not necessarily going to help you when it comes to qualifying, because adjustable rate mortgages look at what the highest portion of that interest rate model is going to be in terms of qualifying. So we're not looking at getting around qualifying, but that can be something in terms of comfortability. If that initial stretch in the adjustable rate period is something you feel comfortable with. And if you don't know, you're saying, Josh, what is an adjustable rate mortgage? Look at some of our other videos where we go into detail and explain that. Now, lastly, it's just, checking in with your lender regularly. If you're looking at different homes, there can be different ways where you do, a temporary buy down or just a permanent buy down to make sure that your interest rate is, again, in that comfortability range. But in terms of qualifying, it's really important that you have those good regular conversations with your lender to make sure you're prepared for what's coming next.